Good morning, everyone. Welcome to the show. Hi, Steve. Good morning. Good morning, stream. Good morning to all of the viewers.
Henry, you could say happy FOMC, slightly
Yeah,
mid-grade, but a happy day, happy midweek. What do you
yeah.
have going
Actually, I mean, we are starting. We are starting wild. We're starting wild. So,
on?
yeah.
What,
Let's talk about it. I think we have some things to discuss. Also, to give an outlook. We need to check some charts. What was going on during the night session? So I would say first things first, guys. Don't forget, it's I cannot state it often enough. Risk disclosure. Do your own thinking. Do your only trade your own strategies. Never follow anyone blindly. Don't trust anything Steve or I'm saying. Do your own thinking. And yeah, it's pure educational, pure entertainment. Let's go. All right, Steve. So Trump basically said 4 or 5 hours ago, MOU is over, and they directly hit like over 80 targets or something.
yeah, I'm not
Apparently,
sure the exact number, but a few targets hit, implicating no ceasefire. That's the main headline I got. No ceasefire, not ceasefire, no ceasefire. So we're off the table. And of course, it made a splash in markets, pre-market, wide, and people always ask, why is it creating a lot more volatility when these kind of headlines happen pre-markets? Because there's less volume, a lot of times no volume in those certain areas. So what does the market do? It gets overbid into areas where there was a lot of volume, and it can settle. But we can get into it. Landed in a very interesting area. It also popped off in a very interesting area. I have all the pivots ready. But before we look into the pivots, my friends, and the ranking and how to assess your session going into New York Open, let's get into the news. Right, Henry? Let's see what is incoming for the day. As we can see, it's a little light on the news front. We have crude oil inventories for any oil traders. Forecast and previously look out for pretty big gap there, as well as a 10-year bond auction, which at times it can move the market.
yeah.
Still be aware of, you guys, happening around 1 p.m. If markets get a little shaky and sell off hard after or hold, that's certain pivot. And also you can look at the Z note, which is the 10-year treasury bond auction. Important to look at. There's always geopolitical risks and assets affecting, not only NASDAQ, but also, oil, gold, and 10-year note. So just to be aware of. And then we have the FOMC meeting minutes that I mentioned. But then again, keyword meeting minutes. So it's shouldn't get
Yeah,
any surprises.
yeah, but it's actually going to be an interesting one because Wash basically said already in his last statement that he wants to stop the forward guidance, right? So it's going to be everything going forward will be super interesting for the Wall Street to see if he will actually follow up with this statement and basically not provide any kind of forward guidance. And so people like it's more uncertainty, right? And Wall Street hates uncertainty and always
Yeah.
wants they had uncertainty. So actually for me it's super interesting to see because we had such a perfectly I would say low risk period with Paul, right, where he basically just either calmed the markets or he already like told them more or less what's going to happen or what kind of conditions need to be in order for them to react in a certain way. So yeah, that's going to be an interesting one for me, to be honest.
Yeah. So just be aware of, you guys, happening at 2 p.m. Eastern Standard Time. More hawkish than expected. It's good for currency. So, good for currency, bearish for markets. This happens around 8 times in a year. And also just letting you guys know, new Fed chair, and he plans to stop scripting So it's interesting. So if he's saying he stopped scripting, then what was Jerome Powell doing, Henry? Was he on the script the entire time for the last over 10 years? Interesting, interesting comment. And it could trigger a wild ride for traders. We are always good for a wild ride, but as long as we are in control, as long as we're in control of all our prop accounts, our risk management, we breathe and live for volatility as long as it's controlled. So I'm all in for it. I don't want a choppy market, which is what we had on Friday, but Friday was a day off, and you'd be surprised how many traders were probably forcing trades even on Friday, which Henry probably saw. But for each their own. It was available half the day, and we're just here to make you guys aware and know what could possibly happen. So these are the news incoming for today.
Yeah, but let me take over from here in regards to Trump and Iran and the US. This is actually now a super tricky one because anything can happen, right? And we have been talking about it like 2-3 weeks ago that the US needs the ceasefire. The whole world economy needs the ceasefire due to its depleted oil reserves, and the missile stockpiles also quite depleted. So there's actually not much room left for them to have an ongoing war or fight, whatever it is. And therefore, I assume it will not be a super long period, like not a super long one, except they really want to take off the gloves and really go hard for it. But then it's going to be a mess, and I really don't think that at this point anyone has an interest in that. So therefore, I'm saying,
Look how
guys,
the market's reacting. Look how the market's reacting the second day in a row.
Yeah, and therefore I'm saying, like, hey guys, be aware of this unexpected news, like, right? As we have seen over the last 2 months, basically through social, either check through social or any other lifetime, real-time publication that showcases you any news coming in. And I think this is what's going to happen, right? Like, hey, they're meeting, renegotiations, adjusting, ceasefire again, whatever the terms might be, whatever might pop up. So always follow the price, right? And it's actually funny because yesterday we have been talking about a couple of levels, and let me quickly bring it up. So I think picture sometimes tells more than 1,000 words. So we talked yesterday about our possible diamond formation or bullish flag, right? So whatever it was, just a quick summary from yesterday. And we had this level. So we said, like, right, this here is our, is it painted? Yeah, it should. Wait 1 second, brush. Yeah, no, it's fine. Yeah, so basically it's this one here. So that's our S2, right? And we said, this is the first level I will be watching for. And you see what happens? We perfectly hit it in the overnight session as a support area, and now the market is bouncing off from it. So what do we want to see? Well, in order for the chart to work, it either needs to get back inside and then go above. So it's going to be like a breakout, kind of a wick side of thing, right? Kind of a wick candle to the bullish upside. Or if it's not, and it basically accepts the trend line and then goes down, then we will have either a diamond formation or a broken bullish pattern. And those broken bullish pattern also work magically because many people are trapped, right, onto the other side. And this is what I would be watching for. So at this current state, or that scenario, but I think at this level, because we're so overvalued in terms of valuations and we had such a run up, I think it has only a little probability, but that we just keep on ranging there, right?
Yeah.
We just keep on ranging and grinding and chopping around, and it will be just like something similar to Russell's, like not a pretty one, right? Extension of range extension, so not a clear pattern in this regards. So yeah, what's your take, Steve?
Yeah, for me, Russell actually looked a lot cleaner how it moved level to level, because it seems like, yeah, it created the levels. That was on the top formation, but then you look at NASDAQ where it just has that huge squeeze pull to the upside, and now it's just creating a level of supply and all-time highs, no man's land, you could say, because market needs time to digest whether it's going to continue to the next level above or it's just going to retest the levels below where it created other level of areas of demand. Simple fact. And if we're going to keep coming out with no ceasefire news, yeah, then the market, probability wise, no financial advice, you guys, will most likely keep going down and just keep retesting those levels. But if you really zoom out on the weekly chart, it's
still a bullish trend, right?
Still bullish trend. And like Henry was saying, from the real economic standpoint, yes, it's a bit scary because of delays, how it affects the rest of the world, energy supplies and other imports and exports. That's the bigger concern. When you look at the market itself, there's no concern.
I mean, by the end of the day, market is has a forward-looking mechanism, right? So it almost never is concerned about what is happening now, but rather what is about to happen. So how, like basically quarter to quarter, right?
Yeah, exactly.
And as you can see it here in the weekly chart, I mean, correction, up move, correction, up move. I mean, it's basically the way market moves. So therefore, I'm always trying, because some people are asking like, yeah, Henry, it's like analyst talking. Like, guys, if you're a trader, you need to be flexible to both sides, and you need to be aware what might happen to the upside, what might happen to the downside, because then you're trading accordingly. If you see this and you understand that it might be here, okay, it looks a bit messy, I have to admit, but let's clean up a little bit.
Yeah, like the same concept on the long term can be used in the short term.
Yeah.
So at the end of the day, we're intraday traders, we are prop traders, that's our mindset. So you can a lot of times, figure out a setup, look at the long term, and then discover what you want on the upside or the downside.
Yeah. No, but I mean, it's also like what we have talked with Steve already a couple of times. If you are taking this big picture into consideration and you are aware that this big picture is happening, this is building up, right? Then there's going to be plenty of momentum once the energy is released and it breaks out, because then you can go for the bigger swings. So for example, if you know that we are here within the range, then it doesn't make sense for you to expect outsized profit target returns, because we're sitting in the range. But once you see, all right, we're breaking out either to the downside or to the upside, and then you have those huge levels here, like previous all-time highs and whatsoever, then like, all right, there might be a bigger potential, and this is where you can swing basically for a bigger win. And this is all about what we're trying to communicate. Like, hey, be aware of the scenarios and trade accordingly. And yeah, let's see through. Actually, that was an interesting one, DAX. I mean, because LNG is affected, oil is affected, so Europe is under much more uncertainty than the US, and therefore the sell-off has been much more dramatic, like at one point almost 2.5%. But also, as you see, we actually extended 3 days ago the high, a couple of ticks, and then now just we are breaking levels, right? This is what happens once liquidity is exiting and volatility spikes up. And NQ, let's quickly see actually, I'm thinking what where's oil. Yeah, we just talked about oil yesterday, right? That it accepted our 67.00, and we said like, all right, it's super interesting that now we need to break this bluish level here, 71.50, and we basically gapped above it. Could not close the gap, like we could not close this gap here. So as for the time being, it's actually a very, very strong upside move. And in my personal opinion, I'm not a day trader anymore, don't have time for that. But if I would trade intraday, I would always have an open chart for crude oil and see how crude oil is basically what it's doing, right? Because Once I see, let's see, there's another headline coming out, we get some news over the wires, and oil is basically collapsing, then you will see a much stronger upside push to this on the stocks, right? But in the same time, if you see that oil is keep on grinding higher, then I would assume that stocks most likely will be weaker. And if you then click through the stocks and you receive some signals to the short side, then I would be much more willing to take maybe even a bigger size. No financial advice, always trade in regards to a strategy. But as we talked about it yesterday, those kind of hints give you an additional edge for a trading strategy. And I think this is the cool thing about using multi-market correlations and also looking a little bit outside of your usual habitat. Yeah, what else do we have? Actually, let's talk about quickly SpaceX. Also been talking about yesterday.
Yeah, we're back to fair value.
Yeah. I'm still not sure if this is where the
You don't think it's
fair,
fair
where
value?
fair value is. It's not upon me to decide what's fair value, but
Well,
given
since
the
there's no structure and we're retesting, really this is the only demand zone I can see on the chart. So since it's the only demand zone, for me, for now, temporary fair value.
You want to see us? Let's just fool around, right? We guys, as you know, Steve has his gaps. I have my measured moves. Let's just play around and just keep it there as a reminder that we might come back in a year or one half. Just see how it might happen.
It's very possible. Yeah,
it's very possible. I mean, and to be honest, it's 75. It's still a huge price, right? We're still looking like at a more than $500 billion valuation at this point. At basically no profits and whatever. Okay, guys, but for the time being, this is the importance of having a line in the sand that you basically understand. And that you start to think through about all kinds of different things, like the dynamics of the trading itself. What kind of player are involved? What are they doing? Where might they have their levels on, right? And then also, once the candles are starting to tell the story. So, for example, that was the open, right? IPO open. We wick below, so it's S1, almost a second one. S2, S is for support. S3, S4, S5. So at this point, you really understand that 150 is available, 150 is available area, right? And that's how you need to see. So it's not about your own opinion. Oh, it's the high, it's the low. There's no such thing. It's really about understanding the market structure, how things are evolving and how things are moving. And this is, in my opinion, what it's all about. So yesterday almost 7% sell off. Was quite interesting.
Reaction from the important level. So that's why Henry and I, we bring up these levels because we want to see how the market's reacting to it. And then again, you can zoom in and use this on your intraday and be patient. And you're not always going to get the best price, but probability wise, it's always better to wait post reaction than just blindly enter on those levels. And sure, you could have said, okay, I blindly entered on the bottom of that area, picked up some points on the upside, but imagine how many traders picked up that fair value, let's say demand area, and are still holding Henry, and it could be at a loss right now. You think they would have sold on that initial spike up close to I think that's around the 30% zone, let's say on the fib from the top to the low. You really think that traders, or like even the intraday swing traders using some leverage in the stock market, are still holding? Most likely, yes, and they're probably underwater right now.
Yeah, but that's always the issue, right? It's you need to have a strategy, and even if you have a buy and hold approach in the strategy, then in the strategy might be in a down period I buy more, right? It's like cost averaging, dollar cost averaging, those kind of things. It's also a strategy, but you need to have a strategy. And what I see all day long is that people only talk about entries only talk about setups, all kind of setup entry concepts, but not about the whole strategy. So how do you behave if you're in a drawdown? What do you do with your risk? How do you behave if you are like, let's say you have a monthly target of 5,000 that you sit at already at 10,000, then you might push it a little bit more because you have a bigger buffer. Especially, guys, a little bit advertisement for us, Purdia. If you trade with us, you have basically a static drawdown in the live account. So as your buffer grows, you can size. It's really easily. You can size up, trade bigger. Your stop sits basically is fixed. No intraday trailing, no end of day trailing. And this is super interesting for people who are interested to become professional traders and want really to size up their accounts to bigger sizes and not just getting same size payouts month in and month out, but basically really want to size up their game.
Yeah. And buffer diminished. And this was actually one of the questions I got yesterday, Henry, and let's bring it on the stream, is because you guys emphasize the live account. That's where you are able to get the payout is on the live process. But people, they're always afraid of other firms because let's say they build up a $10,000 buffer. Once they go to a live account with other firms, we won't say who, and majority of that's diminished into a lower amount.
Yeah.
And obviously with Purdia, the focus is completely different. So Henry, the question is, let's say Sam Joe, for example, builds up a $10,000 buffer. Does he get to keep that buffer in his live account?
Yeah, it's. I mean, this is also what we advertise, right? So we are always trying to be upfront. So and I'm always saying we are not perfect. So sometimes there's miscommunications. If you see anything, let us know. But usually we always try to be as upfront as possible. If you're like for each account, we allow up to 3 accounts. You can build up a buffer of up to $10,000 per account, and this buffer is basically moved together with you into the live account. Yeah. And I think it's a cool concept because there's no like you don't need to fight for another payout. You don't need to reevaluate. You can trade your own style. So let's say if you have an amazing day, it's $15,000, and you're inside the live account. That's yours. It's yours to take because it's a live account. It's basically like your own retail brokerage account. It's just that it triangular relationship between the broker, Purdia, and you that we are running. But yeah, there is no restriction in that part. It's you can really focus on being consistent and don't need to worry to pass any kind of hoops with another consistency rules or with kind of, I don't know. I mean, to be honest, it's basically all the other firms what they're doing. It's a kind of a mini evaluations built in, hidden as a payout requirement, right? But by the end of the day, you also need to pass those in order to get a requirement. And in my opinion, it should not be the case because once you qualify, you should be able to withdraw what is yours, basically.
Yeah.
And yeah. So yeah, guys, if you're interested, links down in the description below. If you use pre-market, you get a 20%, 25% off. So check that out. Otherwise, also follow us on the social, follow Steve, follow Purdia. And also important, follow Purdia on YouTube so you get notified once we pre-schedule the live stream or any other videos that we are about to release soon. You will get a notification. Yeah. All right, Steve, we have 5 more minutes to go. Let's see, where do we stand? So we were sitting actually NQ, so that was I assume that this was the release of the news, right? The big sell-off.
Yeah.
Just an assumption, but I would say that's the case. So the question remains, we have like this blue line is our big support area. And guys, once again, right, if we talk about support area or support lines, we don't talk about tick specifics. Market is also an art as it is a science, mathematical science. So it's more about the area, the fault itself, and not necessarily if the market comes down to the tick or reaches it to the tick in order to be a valid penetration or validation of the level. It's more about having a clear understanding. So yeah, what do we have? We are having this area here. Is it New York? No, it's what are those levels? Oh yeah, actually, yeah. I'm sorry, it's a US low. So it's basically, I
it
would
was like a
say,
lunchtime low, I believe.
yeah. So this is like a valid level, and this is what I would looking for. So for me, the two areas I would look out for is basically this is a resistance and this is resistance, right? So this is a previous low. So for me, it's acts as a resistance. Once price is below, especially we have been accepting it, like more or less, depending how you want to count it. But and then like this big sell-off area from the news themselves. So as long as we're underneath, theoretically speaking, it's a bearish case for me if nothing fancy news-wise is coming in, and everything above is a long scenario. So sometimes it sounds simple, but I like simple. I like to simplify things, and usually those things also work more than they do not. And by the end of the day, it's there's no right or wrong. It's basically you have a strategy, you backtest it, you see how things work out, and then you just wait and see what happens. I think we can. Actually, I'm sorry. We need to talk about oil. Yeah, a little bit more.
Talking about oil, the gap up.
Yeah. So
We're up about 5% today.
Yeah, so we had we talked about on the daily level, but we need to talk about it a little bit more on the intraday level. So yeah, we had our big 6700 level. So and we talked about it yesterday as well, right? So if it go below, if we go above. So at the time being, 7850 used to be our level we have been watching. This is basically this area here, and this is actually again reinstated. So as long as we are sitting below, it's still a short scenario for me. And once we are above, exit. And that's a bit tricky, right? Because we have this huge gap here. Oh no, it's wait. It was not right. Sorry, guys. It's this here, gap open. So 86. This will also start to be an area to watch out for. And that's the thing. If you trade intraday, you need to be aware of these levels because markets always react to them. Might be a bigger reaction, might be a lower reaction, but you really don't want to be in a position where you might be heavily
Long or short.
Yeah.
Position.
So
because it can easily just keep squeezing higher, or it could get rejected. But Henry makes a good point where we're almost guaranteed a reaction from that gap, and that could also be played again. You guys do your short-term trading, where even during New York, if there's a large news spike, there's a gap printed after post New York open, we come to retest that gap, you could again see a big reaction on that. So long-term to short-term.
Yeah. And so yeah, market is about to open in 1 minute. I would say it's tricky. It's a tricky one right today, because the question is, are people waiting for more? Basically, three scenarios. Traders are waiting for more confirmation that peace talks are finally over, because I mean, everyone is like, Trump says a lot of things during the day. So it's kind of like, all right, will there be like official confirmation also from the Iranians that they will say like, all right, fighting continues and Israel is also bombing Lebanon whatsoever, and we see an escalation, then it might trigger a further escalating volatile down move. But if we see some more peace talking and stuff like that, we might easily reverse, right? Steve, you have seen it way too many times over the last couple of months. Markets being heavily down during the pre-market session and then just reverses everything, right?
Versus everything, it looks like we're above the 50% from that initial impulse down. We are open right now, so question becomes, was this whole news, a comment from Trump, just an overreaction? Now markets need to retest it, but the key is the retest. Once they retest it, then the real setup comes where it gets rejected, falls through, it was just a little high, or this whole comment from Trump was just, I wouldn't say like a bluff, but yeah, just I would say, because a lot of times whether he's consulted or not, we don't know. But the algorithm, let's just not mention Trump, but more so the algorithm overreacted pre-market and just sold off a little too heavily because we retested and we're going to continue further to the upside. But for now, market is open. Looks like it wants to retest it.
And I mean, maybe just one last thing for me on this part, on this regards. Look, we opened right into the support area, right?
Yeah.
And it's like it's a triple Q, so we only have the US session here. It's last Wednesday's lows, Friday's lows, Friday's retest. Also try to retest the lows, then yesterday's lows, and now we're also opening again the lows. So that's the area I would definitely watch out in the triple Qs and to see how it behaves. Next target is basically a gap close, and that can be that straightforward.
Yeah. Do you ever look at the gap setting in the ETFs, like with the SPY and QQQ? Like the
I let you. Yeah, I mean, I can. Like here, we have SPY. But I give it over to you, so you can.
Yeah, but yeah, as you can see here, looks like market wants to retest that area right away. It's in a rush, Henry. Whenever markets are in a rush, we all know what can happen after. As fast as it can pump, it can come back down even faster. So let's just wait, because it really had two scenarios. Slow grind. We had the overreaction, the sell off, and now we're starting to grind slowly up pre-market, pre-New York, and now that it's open, seems like Nasdaq is in a rush to just retest that important price level. I put it up here. Ceasefire at 29,410. This is when we had that splash in the market, and I saw a comment earlier where someone was like, "Oh no, like this seems like because of Trump, not even the European session is safe." To me, that just looks like you're using too much leverage, in my opinion. Just go on personal one-to-one like trading. Because volatility can kick in even during Asian session.
Yeah.
You never know. This is why you have to always measure your risk, you guys. And if you're making comments like that, you're just not protecting yourself and you're over-leveraging. Don't worry about the comments. Don't worry about who made them, what made them. Because we can try and decipher what the real meaning was of this new no ceasefire, whether it was fake news or whether this has true meaning to it. We get a retest and maybe a rejection and lower later for a few weeks up until, let's say, the September, October months of the fall when the real volume comes in. It doesn't matter. We can all be analysts. But at the end of the day, the only thing that matters is the accounts you trade with prop firms, how you analyze them, how you measure them, and once you get to that payout stage. That's all that matters, my friends. So, because we can be analysts all day, debate what it truly means, but the market will do what the market will do. It looks like Nasdaq wants to retest it right now. Currently, how many points, Henry? Yeah, currently about 100 points. And these days, what is 100 points? it's
Nothing.
Nothing. Yeah, 100 points can be taken over very quickly. So,
but if you open SPY, it looks actually much weaker in comparison to.
Or the ES,
Thank you.
So ES, yeah. So this is the ES actually. ES SPY, in my opinion, same thing, but just SPY has the gap. But just to kind of compare, because what I do, you guys, is that I place these pivots in the same area on all indices to see where we are and how each of them are reacting from it. It seems like Dow Jones and ES are a bit weaker, while Russell and Nasdaq want to retest it right away. Quickly looking at oil, I put the same pivot on oil, and of course, oil, it's the 180 view. We flip it around, and of course, it has the bullish continuation. But interesting, we'll see. And actually, what I will do, Henry, is I'm going to put an alert here on oil to see if oil is retested. Because if oil is starting to retest it and possibly break through or have that bullish continuation, that will give us some meaning and maybe forward-looking guidance on indices, which are risk on. Of course, we can take a look at Bitcoin. Bitcoin has been dead in the water for a while, a clear bear mode, leading to halving. a lot of crypto traders out there, but you can put the same pivot. And since you could say Bitcoin has its own index of itself as well, a lot of volume trade in this asset, and yeah, look at its reaction where it moves very similarly to NASDAQ, and actually much weaker where it doesn't want to retest for any Bitcoin traders. And actually, I had a question as well: if Purdia offers crypto or Bitcoin, Henry?
Yeah, I mean, you can trade Bitcoin and Ethereum through the futures.
Yeah. So yeah, not a lot of traders, but yeah, still always get those questions since we have people wanting to test all assets. You know, if you have an edge in Bitcoin, then use Bitcoin. If you have an edge in, Russell or NASDAQ, you stick where you have an edge. Use other indices as your confluence. And
actually, there's one thing I want to showcase. After we talked yesterday about CME introducing, wait, let me quickly share this before you continue. So it's coming. Single stock futures, it's coming, 27th of July. I just don't know when Ninja and TraderWeight will implement it, but it's coming. It's official. 55 for single stock futures and 22 for micros. And so it's basically all the names that you would need and that you, like most of the people are basically are watching out for. It's going to be cool.
Nice. And is this on the Purdia or Ninja Trader website?
Yeah, it's the official CME group.
Oh, CME group. Sorry, CME group. Yeah.
Yeah. So therefore, I don't know yet when they will publish it. Introduce it on Ninja's and TraderWeight side. They might be working on it already, or it might come delayed. Mm-hmm. So I'm really curious to see, because Bitcoin in the beginning didn't have much traction. So it was a really low liquidity, super high spreads. So I really hope that they figured this one out with really thin spreads and proper liquidity behind, because then it could be a really something interesting for all of us, actually.
Yeah, and futures CME will be on the hunt for liquidity. They'll be knocking on the door of the big banks, and they have plenty of it, Henry. They have plenty of it.
That's right. No, yes, I'm really looking for it. I'm really looking, because it's like
the only advice from that end I could say is, because I know a lot of friends, they trade stocks. If you have the experience intraday with stocks, then yes, go for it. But if you have no idea with the movement and the volatility what stocks can give, especially on the gap ups, and of course you're just looking at the gaps even on the futures market. If you've never done it before, do your research first. Don't just jump into it just because it's a new shiny object. Okay, guys, if you have no experience trading stocks in the past, have only traded, let's say, ES and NASDAQ in the prop game, then please stay away and do your research and analysis first. That's the only advice I can give.
It's true, but you know how people are, right? Yeah. Gold is rising, gold is pumping, so everyone trades gold. So
yeah, you probably had a huge surge in gold traders a few months ago when
everyone last winter. I think what was it, November up to February, or October up to January?
Yeah, it was crazy.
Yeah, it was insane. All right, let's go through the market ranking, Steve.
Yeah, you guys, let's go through. So then again, why does this matter? Okay, why do these pivots matter? Because not only do they have a headline behind it, but there's geopolitical risk that's creating this volatility. Okay, so as we can see, higher oil up 5%, renewing uncertainty, which drives risk off, which is why you're seeing this big hit on that news pre-market. So of course, this is going to hit NASDAQ the hardest, because NASDAQ feels it first. It's growth, it's forward-looking, a lot of scares in the Middle East with these statements. So you're going to see some reactions with bonds on the 12-year as well. So this is just going to give you some clues of what could possibly happen with future Fed meetings as well. So you can tie this in with macro events. I'm not that specialized to do so, but it looks like, guys, we are getting the retest right now quickly. Yeah, we're about 43, let's just say 40 points away. Market is in a rush, and we all know what happens when market is in a rush. it's best to just stay patient. Sorry, I'm just
Yeah, it's basically like people need really to start imagining it as like a repricing, right? So the market sold off, but the fair value is in term like of what market sees is much higher. So now then everyone is like, oh, all right, it was a mispricing. So everyone tries to get to
exactly.
secure a better price, right? To get in at much better price. Like it's like a sale basically.
Yeah,
If
exactly.
it's
Yeah. So we got this. You're saying we got the sale pre-market. We completely missed it, Henry.
yeah,
And now it's coming back to fair value. So yeah, this possibly could have been this price. Coming back to fair value. Keep this in mind, you guys. 29,410. We are getting the retest any moment now in Nasdaq. Now let's look at the risk on the downside. So currently, right now, I have the ranking as Dow Jones the weakest. I can just quickly, you know what, before putting on the pivots with Nasdaq, let's just quickly look at the ratios, my friends. I look at the ratios also intraday. Before pre-market, Nasdaq was actually the weakest on the overreaction, which is, makes sense because Nasdaq is the most aggressive. But now that it's getting the retest and the surge on the upside, Nasdaq is actually the strongest, as you can see
yeah, no,
here.
I mean, but it's like now it's full blown squeeze mode.
Full-blown
It's basically,
squeeze
I think because many from what I've seen also many times, people are not following the price but the news, right? And they're like, all right, fire starts, so it's all ceasefire is over, so it's short only now. But it's what we are trying to teach you guys. It's follow the price, because by the end of the day, nobody knows, is it just bluff, is it just a tactical negotiation thing that's going on. So but the price knows, because there are people who know. And if you follow the price and the price is not aligned with the fundamentals in this regard, news, then be cautious, right? And if you're not sure, just wait for the market to show you its clear intention, a clear picture.
Yeah, exactly. And then with Henry mentioned before, with ES SPY looking weak, and it's no surprise that NQ took it over completely. Above the daily open, this is what I always look for, the ratios, and then what I do is I also zoom in on the ratios intraday. And once I'm able to showcase the accounts to you guys, I can look into that a little more. But for now, we are matching up the pre-market session now into the New York session, and there's a huge surge in Nasdaq compared to the other indices. So the spread and the ratios is giving us the strongest indicator. And what is that? NQ now is our strongest friend, and with YM at the weakest. So let's quickly do the pivots, and then we will also compare the pivots on Dow Jones and see what is the risk to the downside as well as to the upside. So let's kind of zoom out and also pinpoint, okay, where did pre-market settle? Did it settle? Let's see if it settled at an important area of New York on the previous days. And look at that, Henry. Let me guess. On Thursday, New York opening, where it did settle at, where it felt comfortable and landed right there. 29,000, let's just say 47. Let's mark it out in green because we saw a strong demand level from there, has been bounced and coming back to the ceasefire news area. New York open. Let's zoom back in and let's see if this is where price settled. And it did. Look at that. That's beautiful. It always makes sense. Markets always make sense. There's been very rare occasion where I look to myself and say, nothing's making sense right now. I don't know what's going on. Until I, create these pivots, these zones, I'm like, okay, unless we're in no man's land. But now that we have the measured move concept, even no man's land makes sense now. So everything's connecting, and that's what we're doing here, my friends. This is what we're doing. So so we had a strong demand down at 29,046. You can even call it 29,050, make it a whole number. Now let's draw out the risk to the upside. If price wants to continue, just right around there. Let's just see. Quick estimation and how many points, just out of curiosity, you guys, how many points is this? Yeah, about 350 points. That's the total range for the day. No, I'm not saying that's my amount I will be risking for the day, but just something to keep in mind for, because that's, since we're intraday traders, the gap is way too much. And then just looking at the measured move and look how beautiful that's like. The previous days support, bounced off on Monday, bounced off again during New York Open on Monday and sold off completely right into Tuesday, and it couldn't retest it. So the question is, are we going to get the retest today and continue forward? But none of us know. All we can do is put on some risk to truly find out. Because if you're only observing and you're watching, then you don't truly track as hard. Same with, you can even say same as a sports bet. You put down $10 on a World Cup match. You're focused on that World Cup match 10 times more than you were if, let's say, you had no money on the line. Same with the markets, where you're like, you expect something to do it. Okay, put some money on the line where it's measurable and you're willing to, it's enough where you're fine with losing it. And if you're right, you're right. You book it. And if you're wrong, you're wrong. Journal it and use that as your entry going forward. And the more you practice, more you build those habits, you can use that in your trading. So yeah, this is the level above, 28,776. It has acted as support. And sometimes I like to zoom out to truly see the test of time if this level is important. And as we can see here, yes, it was. On Monday, we got a strong spike here. Blew through it, and it got retested a few times. So because this level was retested a few times as an important area, I will keep it there. And this is scripted, my friends. I'm all doing this live in front of you guys and just talking out my own thoughts. And now let's quickly look at Dow Jones and see how we react again. Dow Jones is just stuck in the mud. You could say, stuck, consolidating in its pre-market zone. It's no surprise. You can't expect all four indices to spike up and retest it. This is where markets like to create a little divergence. And this is totally normal. But, it doesn't always happen like that. A lot of times, all four will spike up and retest it and create divergence maybe later in the day. But because we're creating a divergence scenario right now, this creates an interesting idea for opportunities. Just to zoom out, let's just see where the New York Open is on. This is on Wednesday. New York Open, creating a demand zone for Dow Jones. Pre-market, mark this out. 52,570 was the retest from the ceasefire news that melted through. And let's just quickly do right now the mission move and look at our risk to the upside and see if it makes sense. And this was, then again, remember you guys, this was all-time highs for Dow Jones. So I am not surprised that there's a rotation play now happening out of Dow Jones and into NASDAQ. And yes, because it's been spiking and pushing much harder to the upside, so it needs to cool down. And this is how markets work, you guys. Just because Dow Jones was flying for the last few days or a week or so doesn't mean in this fresh week it's going to continue and do the same. So low rotation play, you could say low resistance area up above here. Hit a few times, spiked above during New York and failed. So that's, that's a good enough pivot for me, Henry. This is what I'm looking for on Dow Jones. As you can see, you guys, I have the Meg 8. You could also call it the Meg 9, include Broadcom. Broadcom is a big player as well, but since it's been the Meg 7 for so long, I know Meta has fallen out the race, Tesla a little bit as well, has been selling off hard lately, but let's just keep it the same, keep it consistent. SpaceX deserves a place there. Talk of the talk. It's trending right now. So for now, I keep it Meg 8, even though I still feel like it should still be the Meg 7. SpaceX has not proven itself. It's still a baby. It's just hatched out of the egg, Henry. It's still very new, fresh volume. So does it deserve the list? I don't know. Maybe we'll take it.
Yeah, I mean, I think people just thinking, all right, it's Allen company, so it's basically a Tesla 2.0, right?
Yeah. So we'll wait and see on that end. Let me just check something right now. Everything's good on that end. And let's just maybe talk about a little bit.
Let me quickly show before we start the conversation. We took a look at the triple Qs before, and we talked about that we opened right in the support area, right? And that the level is basically the gap close. And you see gap close plus a little bit extra, perfectly within its zone.
Yeah, there's so many moving parts of the market. Some say the market wants the gap close in the futures because it's so efficient. But others would say, no, it's actually the gap closing on the Qs and SPY, because there's so much volume getting entered where, the big players, institutions need to, retest those areas to make sure, because at the end of the day, market is the most efficient machine in the world, and it always needs to retest and close those areas for a reason, because not only does QQQ and SPY have a lot of stock market volume, dark pool volume, but also a lot of options volume as well. So there's so many moving parts that need to be, I would say, not closed, but how would you say, Henry? Like, what's the word? Like, markets always need to reassure those areas. They always need to, balance each other out. But then again, maybe we're overthinking a little bit, because, we want to keep our strategy simple, but it's always good to keep in mind as well. And
Yeah, I mean, I think again, there's no wrong or right. It's I have my strategy, you have yours, as there's no such thing as one is better than the others. The only thing we're trying to bring across to the people, as to our viewers, is basically, guys, be aware of that there are so many variations of how you're able to trade, how you can trade.
yeah,
You can basically just trade in Q, and you have triple Qs open, you have the NQ open, you have like ES open with correlations and the SPY, and then you just like have everywhere levels, and that's possible as well. People are doing it all over and over again, but again, they do it because they specialize on the strategy. And this is the thing that I'm not getting tired to communicate, is you need to specialize. You need to find your niche. You need to find your the thing that you will do over and over again. Trading is for me a specialization, or like a specialization game, where you really need to be super strong inside your own niche, right?
yeah. And that's the mindset you've built over time. And just to zoom in here, what am I watching? What is my prop mindset? Okay, it's always, locked in onto my checklist. I'm never chasing blindly, you guys. I'm locked onto NASDAQ right now. Showcase the levels. We also mentioned oil's momentum. It's pivot as well on the same area. And we wait to see whether equities want to follow through cleanly, or possibly oil wants to follow through cleanly, because this is the other asset on the other side that it's affecting. So always reassess. At any rate, there could be surprises as well. This is why, once you enter, you set your risk level, you never move it, and doesn't mean you can also kill the entry as well much earlier, just so you're not getting hit with the measured loss that you calculated. But there's I've cut my losses much earlier too, because I see the whole market starting to waterfall, starting to go to the downside. So there's no problem with that as well, because capital preservation is always first. Edge always comes with staying disciplined, you guys. And when everyone else is emotional, so there's so many times when I see the markets going on the waterfall mode, I could already feel the whole retail space is getting emotional. And when you feel that, and you get that, you get that in a way, that sensation, but you are in control. That's the best mindset ever. When you see that waterfall mode, whether you're the right side or not, or you're completely out, and you've taken your hit or you've taken your profit, and you see the whole market overreacting, and you've controlled your mindset, you're not emotional. That's the best feeling, you guys. Okay, that is truly the best feeling for me. And so we are close to we're close to about 25 minutes into New York, you guys. I'm still waiting for the first 30 minutes to play out. That's always what I do on my end. Soon I'll be showcasing the prop accounts of Purdia as well, working on a few things. We will keep you guys updated. Any questions, let us know in the comment section. Like and subscribe, you guys, so Henry and I can keep doing this going forward. And anything else from you, Henry?
Yeah, no, all good. Thanks, everyone. And just one more thing to say. It doesn't matter how you trade, what you trade. You just need to decide to make one decision and to stay there. It's like a it's like a professional athlete. You cannot play basketball, football, soccer, athletics, tennis, everything at the same time. You need to decide which one you want to pick. That's basically the style of trading you want to pursue. What kind of strategy? Is it price action? Is it ICT? Is it news trading? Is it opening ranges? Is it the closing? Whatever. There's all of them have their pros and cons, and you can mostly all of them make work for you, but you need to decide which path you want to go, and then just stick to it and get super sufficient and professional into the specific niche. And that's what it's all about. And this is, I think, a big piece that many people just don't understand. Yeah. All right, everyone. Subscribe so you stay updated once we go live, and see down below. Visit Purdia, give it a try. Use pre-market code to get 25% off. Otherwise, follow Purdia, follow Steve, even myself if you want. And yeah, we see you tomorrow, 9 a.m. Eastern Time Before the Bell with Purdia Capital.
Yeah, thank you, everyone. Trade safe, trade smart, and embrace the opportunity that Purdia is given to you, and respect the opportunity. And that's all I can say.
Yeah. Safe trading, everyone. Bye-bye.